Okay, so once again, so we got it pulling back right here. And my plan is that, okay, if it pulls back on Friday, I'm gonna be jumping in because we see about 3 to 4 days of it typically pulling back. So in this case, I'm gonna be looking to buy back in through sort of the stock. I'm gonna to go for an option. Now, say that my timing's not exactly right. So I wanna buy some time, give it say 2 or 3 or 4 weeks. So of course, I'm not gonna buy this one, but let's say I give it 1, 2, 3 weeks of time. So I think that after, it's not going to take it 3 weeks to jump up, but I think it's going to take it about another 5 days based upon historical patterns. Now, of course, that pattern's not going to continue to repeat itself. So it's eventually going to run out of gas, but I think that there's still enough steam in it just because companies like Lee, XPEV, NEO do actually have the cars versus companies like Nikola and Fisker and the others. They're still in the idea stage. They got the prototype, that's it. These guys already have sales underneath their belt. So current price is $64.27. I'd like to go near and at the money. That's just me personally. So in this case, so it's $64.27. So I'm going to start looking at things that are going to be slightly in or around here. So say 64, 65, 66, 67 dollars. Now the next thing I start to look for is open interest. That's the very next thing I look for. So okay, so I look at 67. Okay, there's 81. That's really low. 63. Oh wow. Okay, so there's some movement right here. Okay, so there's a lot of traffic, a lot of trading here. And why that's important is that your option, you need to have some liquidity. So if you buy one with very little open interest and your option runs up, you could potentially be holding an option that you want to liquidate if there's not a buyer on the other end. So you typically want to go with something with a lot of open interest. Now, doesn't mean this is going to stay that way. I imagine as time does approach, there's going to be more people here, because I'll even show you. Okay, look, you can see there's hundreds, thousands, tens of thousands of people right here. These same players are eventually going to transfer over, if not already, over to these plays. So, but just an FYI, I like to look for open interest. That's the next thing. The next thing I like to look at is delta. So my rule of thumb is typically about 0.3 or above. So in that case, and the reason why I do that is that given the amount of risk I'm taking with an option, I like to make sure that once the thing moves in the general direction that I like, I needed to print enough money quick enough where I can be able to exit out, of course, with open interest and still make a decent amount of dollars. So if it's lower than 0.3, then it's like it's not appealing to me, and I don't think I'm going to make a good enough rate of return. We talked about gamma, and this is going to be kind of a multiplier that adds onto delta each time. So this kind of helps get the snowball factor going in. And of course, I do take into consideration theta a little bit. I don't really honestly look at theta too much because I kind of already got the sense of how much time decay it will be, given that my play is, okay, I'm going to buy on Friday. That's the 27th. So I'm not buying these ones, but I'm going to expect to exit out before the 4th. Now, just in case I'm wrong, I want to have enough time for it to pull up, say another week, and have another 20 or 30% shoot up from here, so from $64. So in this case, I want to have enough bang for my buck and not too much theta decaying as far as my rate of return. So that's kind of how I look at it. All right, so in that case, any questions around that so far? Yeah. So theta matters more if you're playing a weekly option. On longer term options, like several months to years, then theta doesn't really matter so as much until you get closer to the expirational date. So absolutely. So that's in the comments from Dan. Thank you so much for pointing that out. So that's how I'm kind of playing this out. Now let's kind of get into a little bit more of the technical analysis, if you will. So bear with me. And then actually, I think this may be a good spot for me to address the question about stop orders and limit orders, as well as, okay, we're just, okay, so going with market orders, limit orders, and whatnot. So with a market order, so the nice thing about Webull, I would say this is kind of a nice thing, and it's also kind of a negative thing as well. So one of the nice things about Webull, and this is only applicable towards options, is that they only allow you to do limit orders. Now, a limit order means I'm guaranteeing the price. So I'm going to buy at this price or better. So in this case, if I'm going to be buying options, or say buy one contract at strike price of $65, I will be paying $835 on that option. So in that case, I would click on this, and it would bring the order up here. It says limit order for that. So now, of course, the market is in constant movement. And this is the negative thing about Weebulls with it only allowing you to do limit orders, is that with a limit order, it says it has to hit that price or better. So if the market is moving upwards and you say I want to buy at $835 for one contract of at strike price of $65 for XBEV on December 18th, 2020, and it's moving upwards, you're going to be having to chase it. And having to chase on Webull is kind of a little bit of a pain, because now I'm having to shoot it further because the limit price is not going to execute. Or you could be patient and could be waiting for it to fulfill, which may not happen. So that's kind of one of the things, is that you're saying, hey, I want this price or better. I'm going to be patient. If it's moving, that's fine. If I miss my opportunity, I'm okay with that. Versus a mark order guarantees the trade, but not the price. So I know Chris says he does not like to do market orders. I certainly don't like to do them. As I most specifically don't like to do them on stocks, but in this case, Webull takes out that option for you where it's only limit orders. Now you also have stop losses and trailing stop orders. Now a trailing stop order in a stop limit order. So I'll actually go with the stop limit order. So stop limit order is one where you could sell it, put a sell order, and you could put it even for a day or good till cancel, which good till cancel, I believe is it 90 days, Dan, or is it 30 days? I think that they changed it mid-time when I was in the industry to 90 days. I could be wrong.
I think let me look it up really quick. I want to say like 60 actually, but no, you're right. It's 90.
Okay, 90 days. So at one point at GTC, so if you're on Robinhood or any platform, this is industry standard, they go, okay, so you're executing a limit trade. So that's okay. So that means you want it at this price or better. And then they're going to go, okay, for how long do you want this order to stand? Okay, so you're going to say, you can say day. So that means it's within that closing day of the stock market. After that, they just cancel it and pretend it never happened. Now GTC, and this is where I'm okay with doing this with stocks, is a good way to just kind of set it, forget it, is if you're that passionate about a certain stock. And then you can come back and it goes ahead and fills that order for you. And it's good for 90 days until you cancel it. If it doesn't fulfill within 90 days, it just falls off of the planet, never to be around again. So, but go with the stop limit order is where you can set an order to sell a stock or an option once it hits a certain price. So if you're selling, you want to get the price. Say, okay, in this case, you bought this at $8.35. So you want to, of course, have this something higher. But in this case, if you're selling at $8.35, which I don't imagine you would, because you don't want to break even, you want to make money, it would sell at $8.35 or higher. And a limit order, when you're buying, once again, it's $8.35 or lower, because you want to buy low and you want to sell high. So that's the nice thing about stop limit orders. Now, a trailing stop order is one that you can set onto a stock as it's climbing, and say, hey, I want it to, typically people like to put it at about 20%, where once it's climbing, and if it drops 20% from its high, its new high, that it goes ahead and executes and sells it off. In that case, it stops your loss. So hopefully that that makes sense for you guys on that. Okay, cool. So good stuff on that. All right, so let's go ahead and kind of get into the technicals. Unless, do we have any questions more on options at this time? All right, good deal. Okay, so the very first, unless if we had any questions, yeah, feel free to, you can go ahead and unmute or type it up in the chat. I'm happy to kind of stop and address any other questions. So let's go back with technical analysis 101. So I think the very basic thing that you guys want to learn is the candlestick. So I was kind of just talking about it a little bit earlier. I know some other people just chimed in. And with a candlestick, it represents one time period. And you have, and this case, going back with this one, and I hate that you got the body and you got the wick. So a red candlestick means it's going down. So this is where at the body it opens here and it closes here. Now the wick means within that same period or this daily chart, it was priced between here. But nonetheless, this is where it opened, this is where it closed. The very bottom for a green candle, that's where it opened, that's where it closed. Now there's not really much of a wick over here, and I don't see a wick at the bottom, but that would show you the daily range of that price for that day. Oh, you know what? And let me just get rid of that indicator. So that kind of makes it a little bit easier to see. So now with candles, let me move to another chart. And this is something I like to do, is I typically like to start with the dailies, and I typically like to work down. So I don't think I'll be able to cover the reason why, because we'll get too sidetracked from the basics. But that's what I typically like to look for, and how part of my process with looking at technicals is start with a daily, and I work my way down. I don't day trade, so I don't really go down as far as 15, 5, or even really 30. But sometimes I go down as far as down to an hour daily intraday chart and to look at it. And that's just for the sake of just trying to get it at a better price within that day, versus just trying to look at the daily chart and then try to swing it for a few days out and go, okay, well, and just buy it with whatever, buying it potentially the highest price of the day. And then you're right here. And then you have it where it's like there's not much price action and you miss out on some potential gains. So, but going back with an hourly chart. So what I'm going to try to do is show you try to pull up some reversals. So one of the very first things after I learned candlestick charts was trying to eye a hammer, and I believe it's called a shooting star, if I understand correctly. So those are typically found where, I'm trying to see if I can find one. I can't. Actually, no, that's not one. Yeah, surprising there isn't one. But oh, actually, you know what? There is one. Okay, so this is, and I could be, I believe it's called a hammer. I can't remember all the technical names, but this is typically where you see the price get really, really, really thin, the body of the candle. So it doesn't matter if you have a really too much of a wide wick. Typically, it's supposed to be just with one direction, but normally you see it where you have it just right here. So what that is happening, because of course there's a force of buyers, there's a force of sellers. So you got more sellers, of course, on XBEV. They're going, okay, let's go out and buy XBEV. I love the stock. I love the stock. Okay, next hour, same thing. More people are coming in. More people, and even the same people are buying more shares throughout the day, because of course this is an hourly chart. And then at one point, where the people that are buying up XBEV during this time frame are going, hey, I had enough. maybe when you got some people starting to take profits. And of course, during this whole time, there's always going to be sellers, okay? And these people are overpowering the sellers. And then there's a point where there's an equilibrium where there's, okay, they're pushing and it doesn't come through. Sellers come in, you got more buyers, okay, and it just kind of, but for the most part, within that hour, it just stayed right here. Typically, that's a sign of a reversal. So, and in that case, you can see it start to pull back a little bit. So, and you kind of even see that even just right here where it reverses. But typically, when you see it get really, really skinny like that, it is typically a signal that it is starting to reverse on the candlestick chart. I'm trying to think as far as if I can try to look to see, find some more examples on this. Not a reversal, but nonetheless, that's it. Okay. Any questions on that? All right, very well. Okay, so let me go ahead and I want to take out my indicators as well. But let me just go ahead and in case we're just focusing on this. And I think we already got, of course, that's kind of pretty self-explanatory. It's got the green, it's got the red. Okay, so the next thing I think I would probably start with next, as far as with technical analysis, I think probably the easiest thing as far as basics is probably moving averages. So that's one of the things I like. Now this one, I don't know why Webull does this, but it has the 5. I want to delete the 5, but typically the most common ones that are used are the 50, 100, and 200 as far as moving averages. So with it, you have, of course, this right here, and I may need to pull up another stock to even demonstrate this a little bit more effectively. Let me go to Pinterest. But as you have the moving averages, this is kind of a way that they say to where it kind of removes the noise of the stock. So because of course the stock goes up and down and changes in price every day, but the moving averages just show you, okay, what is the average of this stock the last 50 days? And then once it crosses, of course, the 50, now it's kind of in a bearish trend. And then once it crosses back over here. So this is considered a whiplash, and then it crosses back over. Now it's in a bullish trend. So now it crossed over here, and it's entered slightly into a bearish trend, but that's just unfortunately there was not really a confirmation, and it shot back up. So actually, I just remembered something else. So so break down actually the candlesticks. So this is where, before we go into the moving averages, I'm sorry, we're jumping back and forth, but about it. Let me just look to see if I can find a good picture of this, and I may even need to go get a little bit. I wish I could have some. Let me try to see if this is where. Let me find another stock that would be a little bit easier to kind of demonstrate the next point I want to kind of discuss. Let's maybe go with Tesla. Or Netflix. But okay, what I'm trying to look for is kind of show you just where all these gaps are just throwing us way off. I wanted something clean, but I guess I'm not going to have something clean at this. Okay, this looks pretty clean. Okay. So right here, as of course, this going upwards is going to be what we call a bullish trend. So with it, of course, this is on the 2 hours. This represents 2 hours, 2 hours, 2 hours right here. But over the course of time, you have times where it comes down. And when you have that, okay, so this is where I wish I had a little bit of a drawing board, but as you have these ups and down periods, you go up and then you go down. This is where it's normal to have the pullback and the little dips right here, and these present, I think, good buying opportunities as you guys, or in a slight pause for a lot of people as we all kind of talk about. And this is where people like to, but this is where you'll know it's just a slight pullback if it doesn't break past the new low. So there's, of course, it goes high. It's got reached a new high. Okay, there's not a new low, a new high, a new low high. So hopefully this is making sense. So in other words, the way that you know it's reversing its trend is where, okay, so let's go over here. So typically where each time it makes a run, there's always a new high. Now it starts to dip, but it doesn't dip below the previous low either right here or more so applicable right here. Okay. It climbs, it drops a little bit, it climbs, it drops a little bit, climbs and drops a little bit. But each time, as you look on this, it's a new high. So that's a signal that the bullish trend is going to continue. So even when you see it pull back, unless it drops past here, then you got confirmation. Well, it's technically not confirmation. That now you got one of two signals. So you got to look for two signals for it to turn into a bearish trend. So you got it where it's kind of dipping a little bit, but it doesn't really technically break down here. So now if it broke down here, you got a confirmation. So and that it's starting and enter into a bearish trend. Now look over here. So it runs up, okay, it drops down, Okay, now we got a confirmation. So you got one of the two. So that it's going to be entering into a bearish trend. So you got the pull. Well, actually, no, actually the first one is actually right here. I'm sorry. So the first one is actually, the first confirmation is going to be right here. So, okay, so it's dipped back. That's very normal, just like these. And then you got the first confirmation right here because it didn't reach a new high. Now, if it breaks below this low, then you're starting to enter into a bearish trend, and therefore you have this second confirmation. So in this case, you go from here, okay, it pulls back, it's very normal. You're like, okay, you know, I bought right here, or maybe even somewhere even right here. I'm a little bit nervous. Okay, it's running up, it's doing its whole thing. Oh God, okay, now it's starting to reverse. Now you should be a little bit worried, but nonetheless, this is where you could be able to have a stop loss order. Is probably somewhere right here once you have confirmation, because of course this is the very bottom, and if it breaks this bottom, then now it's signaling that it's entering into bearish trend. So you got here, it's dipping, but it never breaks below this. So it stops there, and then of course it shoots back up. Now that second confirmation did not come through, and therefore it continues its bullish trend. Now let's go over here. So okay, it's reached a all-time high right here. Okay, it's running up. Okay, excuse me, it's running down. Oops. Okay, hopefully this person wasn't waiting too long. It's running on down. It's going down. Okay, now we got a little bit of a signal going on right there. Okay, then it starts to pull up because we know that stocks go up and down over certain periods of time. Okay, it goes up. Okay, it doesn't break the new high. Okay, so in this case, you got the first confirmation. Now you got to get the second confirmation if it reaches a new time low. So it goes, and hopefully you got a stop loss order that's going to be down here. And it does. And notice what it does. It continues that trend. A new low high. So it doesn't break the previous high to reverse. Keeps going. We can continue to even see that pattern right here. Okay, now we got this high right here, and it breaks it. Okay, so we got one confirmation. Okay, but then the second confirmation does not does not break, because if it stops, say right here, and or anywhere before it gets over here at this previous low, then we would have the second confirmation that it's going to continue its new bullish trend. But we see that even demonstrated right here. Okay, it stops. Oh, look, we got the shooting star and hammer right here. It stops right here. We got equilibrium. We got peoples and buyers and sellers coming in and looking to come go through this. Okay, and look, new highs, new lows, higher highs and higher lows. Easy as that. So that's kind of the basics as far as 101 with the candlesticks. Now, hopefully, I think we covered a good amount of that. And the next thing I, of course, look through is, of course, the moving averages. I think that's one of the easiest things to kind of take out the noise and to kind of see, is it really trending? So, and to quickly kind of go over that is that when you got the price below the moving averages, it's entering into a bearish trend. So as it starts breaking below these various different moving averages, it tells you how much of a bearish trend, or how long it could potentially be in that bearish trend, which it looks, as you can see, for quite some time. So, alrighty. So any questions around these at this point? Okay, that's good stuff. Alrighty, and so we still got about 15 minutes, or about 13 minutes, and I want to make sure we're taking a good amount of your guys' time and covering all this. So I'm gonna give it a little bit. I'm gonna go over this about 10 more minutes, and maybe what I can do is, say if I were playing an option on Netflix, and this is where I can already tell we're probably, because I got Netflix, how I would play this. And I can already tell I'm going to go into something else, because right here I can see some supports and resistance, which is a whole new thing, which we can probably cover later. But with support and resistance are certain price points where you can see that psychologically people are selling and buying at the most. They're pivot points. So in this case, just even kind of quickly demonstrate that, I'll even show one for you guys. And of course, the swing. So I go back to the day. Let me get out of this. I like to go back to the dailies. Oops, let's get out of that. Please. Okay, and you can see that there's support and resistance right here. Okay. So I would get a horizontal trend line. And I also like Fibonacci's, which we'll certainly cover that eventually. I kind of prefer Fibonacci's a little bit more than support and resistance. But I draw that right here. Okay, so I can see another one right here. And the whole idea of support and resistance is to kind of give you an idea if it breaks past this line, it can tell you as far as, is it going to go up or is it going to go down. So in this case, as we're looking at Netflix, so at about 394, we see there is support and resistance right here. So as it kind of ran up back in, looks like December a year ago. Okay, the stock ran up. Okay, and then sellers, buyers are like, you know what, I'm taking my profits. It's had its good run. It's been running up for several weeks or several months for us. Oh, actually, this is February and they're going, okay, I'm getting out. And then as they watch the price come down, they're like, you know what, I'm going to buy in. Oh, you know what, I took a profit here again, and it goes down. Of course, this is where they come back in, and this is where psychologically now it's punched through it. Like, hey, it's great. Okay, so we got okay, you can see it come back down. People they're buying, they're selling, and then once it hits back the support and resistance, this is another psychological barrier. A lot of buyers and sellers had previously were taking profits. now they're looking at this as a more of a support line. They're like, hey, everyone's rushing back in. They buy it. Okay, now they're selling it. Now they're buying it. It, almost touched again, and then it hits right here. And you can see this is where it touches at several points. Now, the key to these trend lines is that in order to draw them, so if you're wanting to get into the technical analysis and kind of start doing them, this is where you're going to want to make sure it's touching at several different points, as many points as possible. Now, the last thing you want to do is have 20 of these. This is where I think that the less noise, the better. I see sometimes where people have like 4 or 5 trend lines. I try to keep it as minimal as possible and have just a few trend lines as possible. So 2 is good. I think 3 is where you start to get a little bit too heavy on the trend lines, but this is where it could be potentially signaling to you a good potential buy or sell position. So now if I was to look at Netflix, okay, so now that I have my trend lines identified, okay, or excuse me, in support and resistance, okay, this is a good point. I may want to even adjust this maybe a little bit more and play around with it, see if I can get as many points as possible. Okay, I'm going to stick with this one because it touches more points. Got 1, 2, 3, 4, got 5 points right here. Now this is trading a little bit higher. So this is not exactly where, okay, it's at a support line, so I may not buy it, but say theoretically, if I was to still buy it here, which I would technically wait, but I would wait till it gets here, and I could potentially buy, which I don't think I would, because as I'm looking at this, this looks like it could be heading downwards. But nonetheless, let's say if I was bullish on this. I would buy a call, and as you can see, okay, well, during this time frame, the price range from say October till September is where you got a difference of roughly about $466 to roughly about $570. So $100. So you're looking about 25, 30, maybe 40% of a range. So there's good range within a whole month. So you're probably going to want to buy a call that's 3 months out. So of course, with Netflix, it's going to be a little bit more expensive, but nonetheless, hopefully you guys are getting the picture that I'm painting right here. So I'm going to probably buy a call that's going to be 3 months out, but once it hits right here, you can set a stop loss right down here, say 462 or whatever that would equate to be for the option or the stock. And then right here, hopefully you can have that amount of movement as you saw in the previous months, where you can be able to have your call pan out. So, but once again, this is where you get the confirmation where, and I would maybe even sell a little bit, put a stop loss or have it sell your call if it even falls below this even further, because you can see it even dip below, a little slight whiplash. And don't want to have it execute it just in case where it comes down briefly, then shoots back off and you miss your opportunity. That's kind of like the downside, is that these technicals are not exactly perfect. They're not meant to be. There's not going to be one all be all solution that's going to be providing you something that's exactly perfect. Cool. So hopefully this is helpful. And maybe let's even go into a little bit further. So say now that I'm looking at that option, so since we talked about it, I'm looking at a few months out. So I said, it took about 1 month for it to move. So I'm going to look at something about 3 months out. So we're moving into December. So December. So I want to the end of December. Hopefully it reaches my target price. So January and then February. Let's go for something, say in March 19th. Let's go for that. So we're wanting to hopefully hit, say $562 at that point. And another thing that you can do is check with an options calculator to make sure that this is going to work in your favor, which I have an app on my phone. And it is available on desktop version as well. It is OPC, so if you guys can see your screen, it's OPC, so options profit. It's an options profit calculator, so that kind of gives you an idea. This is where I'm not doing it calculating, but I'm pretty sure off the top of my head that it's going to work out, just roughly eyeing it, if you will. So I like to do, of course, near or at the money. So we're at 485. So 485, and even you can even see there's good enough open interest. Now, some people have it at about 500, so I may even go right there. It's a little bit too high for me, but Netflix is a popular one. So if you get into options trading, you'll soon realize that there are stocks that are very popular. Netflix is one of them. Tesla and Apple are probably the most popular ones that are ever traded. So going with this, I would probably go with 485 or 500. It meets my goal of delta of 0.52 theta. This is where you got an option that's at about $4,000. So it's going to be quite expensive just to buy one. In this case, the negative 18, it's not going to be too much, and you got certain, and time is certainly on your side on this. So cool. So that's kind of just a rough estimate of kind of how I like to play my options. This is from the perspective of myself. None of this is recommendations for any securities or endorsements. By all means, this is kind of gives you guys an idea of what goes through my process, what I look for it. If you want to even go a little bit further, I like to look for catalyst things. So I see, which by the way, I wouldn't play Netflix, not just because it's not at the support and resistance, but also because there's no real catalyst. So I have to look around for news. I watch CNBC. I have it in the background pretty much when I'm trading. I have the news up and try to see what is going on and what are people talking about, even from the Facebook group, because that kind of gets my eyes out in many places. But catalysts are very important to create that movement, or else you're going to have something trade like this, which if you have it trade right here in this range, you're not going to make much money. So I like to go, I say 20%. Sometimes I do like to go for 100% on some of these, and I'm certainly sure you guys would like to get a double rate of return on some of your options. Cool. I think this was a quiet group today since we didn't really have any questions. But Dan, did you have anything that you think would be applicable, or something that we could add to this?
In terms of options trading or technical analysis?
Either or.
Yeah, sure. I might have missed it, but did you talk about like which indicators that you use?
No, I didn't go into the indicators. I stuck with just the candlesticks.
Got it.
I very, very briefly, and I did a horrible job on just the moving averages, just because I forget how to kind of teach this, because it's like I just look at it, and this is where I can tell right away just by looking at it, where I'm like, oh, okay, like this is where the support, this is where the resistance, this is, and I forget even a lot of the terminology on these candlesticks. I'm like, oh, okay, that's a reversal. I can't. That's a hammer. That's a shooting star. I can't even remember which one's which, because one is a signal as far as going upwards. One's going to be signal as far as reversing downwards. So my apologies to you guys, but this is where I've looked at these so much that it's just where I just barely even look at them, to be honest with you. So this is where I focus more on the fundamentals, looking at the financials. I look to see as far as what deals are going to be made, what is the market opportunity, because that gives me, I feel like, a better sense of the direction than looking at the candlestick charts. But the candlestick charts does add another, puts another, gives me more ammo on building my case as far as why I may want to play this stock. So just kind of an FYI.
Yeah, no, that's good. Like for me, just for the group, and I would say research these just because we probably don't have time to go into each one in detail, but MACD, which is the moving average convergence divergence, that's what it stands for. MACD and RSI, the relative strength index. Those are two good indicators that a lot of traders use to help them understand where the price is moving during the day. And depending on the chart you use, if you use like a 1 minute chart, a 5 minute chart, or even a daily chart, which I use those three specifically, I like to use those because it tells me on the 1 minute what's happening as close to real time as possible. On the 5 minute, where the trend is heading, on a 5 minute trend, which I typically tend to lean on more. But then the daily, although I don't use that for trading during the day, I look at the daily to see where the stock might be moving overall, because it kind of gives you an idea when you look at a daily chart on the MACD and the RSI, like, oh, this stock looks like it might continue heading up for the next couple of days or might, reverse. So I use those three. I definitely would say if you're looking to understand technical indicators and do more trading, you definitely want to check those out. Again, those are two, the RSI and MACD are two that are widely used, and most traders use those. So those are good to follow. There's a bunch of other ones as well. Some of them are a little bit more complex, so I probably won't touch on those, but I'll start off with those two. So I use those. And then in terms of like options, everyone's different, like in terms of, what sort of strike they want to go for. Ken, you talked about that like earlier, right? I think
Yeah. So I like to do near and at the money. I know Chris says that he likes to do in the money. So that's a little bit too much for my risk, because for people, this is where if it goes to the opposite direction, it'll start cranking out where you'll be losing faster. So near and at the money is better for me. If you do too far out the money, it's you're just, in my opinion, you're too far out. You're not going to get enough bang for your buck. Now it's yeah, so that's just me. So near and at the money, I like to be close as possible. Then I cross-reference it with open interest and just try to go from there.
Yeah, no, and I agree too. Like, especially if you're playing weeklies or very short-term options, you want to be picking options that are near or in the money. The only time you would pick an option out the money is if you're playing like a leap, like a long-term option, which is, several months to several years. Then you can pick out the money because you're betting on the fact that it's going to move toward that price. But otherwise, if you're playing short-term, yeah, don't do out the money because you're betting that you're going to have to hit that. And it's easier to bet on a strike that's closer to where the stock is trading.
Absolutely. Okay. Yeah, and so we had one question. So Brandon, so what's the YouTube channel? It's called Let's Invest and Trade Together, just like the Facebook group. I'll actually post a link onto the Facebook page. In that case, you guys can subscribe to it. We already have a few other videos on there as well. We had last week's, we're still loading, trying to edit last week's video. So I apologize about that. It was a user error on my part. Plus, I had no idea it took so long. It could be also part of it is that I'm running just a simple MacBook Pro versus a $3,000 desktop computer with more RAM and better CPU. So, but nonetheless, we certainly will get the last week's video. This one has been recorded, so we'll post that up. I don't think we'll have the same issue because part of it was just editing some private information that was accidentally displayed while we were recording on the screen. So, but I want to thank you guys so much for joining us for today. Thank Dan as far as for his help with that. We'll cover a little bit more on RSI, the MACDs, moving averages. I know we kind of touch up a little bit on it, but if you guys can support our group and what we're doing, feel free to subscribe to our YouTube channel. Please invite people to the group, subscribe to our newsletter, tell others to subscribe to the newsletter. If you're finding it helpful, by all means, we appreciate a warm and heartfelt testimonial, kind of posting it and sharing about your experience with the group, as this certainly helps us out in providing meaningful content. And last but not least, we got the PersonaFi application that is coming out in January. We're working diligently to get that out to you guys, both web and iOS version. And thank you guys so much. Have a happy Thanksgiving, and we'll see you guys as far as next week.
Thank you so much, Ken.
Thank you.
Thanks, guys. That was great.
Thank you, guys.
Happy Thanksgiving.
Happy Thanksgiving.